So welcome to our next series in the educational video series, and now I'm going to talk with you about the psychology art of candlestick formation. So many traders often understand the candlestick formation just only based on the shape, only on the candlestick formation, and trading guru also never mentioned why this kind of candle is formed, what makes this candle forms its shape. So right now I'm going to give you some of my knowledge about the psychology art of candlestick formation. And before we go to chart, as usual, I'm Alex, your technical analyst from FundYourFX, and let's talk about the psychology art of the candlestick formation. Okay, first let's talk about harami candle. Okay, harami candle is a candle formation formed by two candles. The first one is the mother candle. Wait, let me use the pen, okay, or laser pointer. Okay, here, you see here, this is the mother candle, and the second one is the child or the smaller candle. Okay, so let's talk about the psychology part. The psychology behind the harami formation is the harami forms when a dominant force, buyer or seller, begin to lose its momentum. Market maker often reassessing their position here in small candle. The market maker or the big institutional player reassessing its position. The pause could be due to unfilled institutional order near an order block. They don't want to push the price further until there is more liquidity enters the market. So retail trader may interpret this as indecision, but the smart money views it as a rebalancing of risk or a waiting game for the dynamic liquidity market. Okay, so the technical side, the small candle should have formed within the range of the mother candle. So the high and low of the child candle or the smaller candle shouldn't exceeding the high or low in the mother candle. So this example is the textbook perfect example. If you want to see the real actual harami candle happen in the market, it should be like this. There you are. The small candle still in the range, within the range of the mother candle, but we haven't seen a gap up or the gap down here. Okay, that's the difference. Is it actually the bearish harami? Yes, it's still the bearish harami because the small candle still inside of the mother candle. Okay, is this actually a bullish harami? Yes, of course, because the small candle still in the range, within the range of the mother candle. Okay, so let's go to the next candle formation, which is engulfing candle formation. So same as the harami candle formation, the engulfing candle formation formed by two candles. The first one is the small candle, not like the harami candle, the bigger one. This is the smaller candle as this first candle, and the second one is the big engulf or exceeding the low or the high point of the last small candle. This is the engulfing candle. So the bigger candle, the range of the bigger candle should engulf or should exceeding the range of the smaller candle, the low and the low and the high. Okay, so let's talk about the psychology part. Okay, this candlestick formation can appear because the market maker is taking all the order in that period after the small candle appear. Here, small candle appear, maybe this one on the resistance, and then the market maker or big bank take massive order on supply zone. Okay, then an engulfing candle represent a power shift. A bearish engulfing power after a bullish run show that a seller have overwhelmed the buyer. Here, after the bullish run, the seller overwhelmed the bullish candle, and the market maker may have finished collecting order in that zone, in this supply zone, and now push the price in the opposite direction. Okay, so retail trader get caught in these continuation trades. The engulfing gets them off guard, but the smart money use this shift to trap delayed entries. So of course, also this was a perfect book example of the engulfing candle. If you want to see what it's like in the real-time chart, it should be like this. There you are. The difference is same as the harami candle. We haven't seen the price gap up or gap down here. Gap up. Yeah, we are not seeing the gap up or gap down price action. Also on the bearish one. As long as the bigger candle range exceeding the range of the low and the higher candle formation, okay, it should be determined as the engulfing candle. You can see here, okay, this is the higher, this is the high point, and this is the low point. The high point and the low point of the bigger candle or the engulfing candle should exceed the high point and the lower point smaller candle. That's the actual engulfing candle. You often see it in the price market or in the chart. Then let's talk about doji. Here, doji is very simple but powerful candle. So by the way, often the time doji mistakenly seen as the spinning top. It's different, it's quite different. I'm going to talk about it later. Okay, so first let's focus about the candlestick doji. So the doji candle should have not body or little body or only small volume body. There is no pinpoint like how much in the term of pips, but let's say maximum of 5 pips. It's very small from the opening price and the closing price. It should not exceed 5 pips. It's very small, like this maybe. I don't know. It should be not more than 5 pips. So let's say like that, so you can have the easier data to process. Okay, so let's talk about the psychology part about the doji candle. The doji represent a balance between buyer and seller. It can indicate that algorithms are pausing execution or adjusting based on real-time order flow. It's often showing up during low volatility but high tension. Okay, so retail trader may see this as confusion. It may be the calm before the storm. It could be. So smart money waits for doji to signal upcoming expansion after compression. Okay, it's like a sprint. It's compressed and then it expands very quickly. That's the point. So technically, it's a pausing candle where it can break in both directions, but after the time, it will follow through its last momentum. Okay, so it can be categorized as the continuation candle formation. So what do I mean by the continuation candle formation? If we have seen, okay, let me annotate so you can see it more clearly. So if we have seen a candlestick like this, let's say this is a bullish candlestick pattern, and then it come to the doji candle as a pausing or indecision candle, then the next candle after the doji, it can be the follow through. This can be like this again, the bullish momentum candle. So for the entry point, you have to wait for the doji candle breakout, okay, like this one. Okay, so in this video, by the way, I'm not going to talk about how to enter this market with this candlestick formation. I'm going to do it in the next video because it was too long for this kind of content. Okay, let's erase all. Let's go to the next formation, which is spinning top. Okay, so on the spinning top, same concept as the doji candle, but there is actual volume here. This is the volume here. This is the volume here. So it could be the continuation because after the price stop or after the spinning top candle form, we are going to likely, for the bullish one, we are likely going to see the price continue its bullish momentum like this. Same on the bearish side or the bearish top candle, spinning top candle, it's going to be the same. After the bearish spinning top happen, and then we will likely that the price will came down or continue its bearish momentum like this. Okay, so should be clear now. And then let's talk about the psychology part. The psychology part about the spinning top candle formation is this pattern suggests indecision. Here it is, indecision after volatility. both buyer and seller attempt to dominate but neither succeed. This could be due to matching institutional order on both sides, keeping the price range inbound, like this one, like this price action, see? Okay, and the purpose of this candle formation is the same as doji candle. This formation can exhaust retail traders. They try to follow the initial wick direction. But get stopped out when the price reverses. It signals internal struggle in the market. Okay, so let's move down to the next candle, which is shooting star. Okay, the shooting star candle should be the bearish reversal or the bullish become bearish reversal pattern candlestick. Okay, so the shooting star candle is look like inverted hammer candlestick formation here. It should be easy to see because it's very clear if you are seeing hammer and invert them. There you go, shooting star candlestick pattern. And from the psychology part, shooting star candle formed because of a change of perspective from the market maker when they hunt the supply, because it happened on the supply zone or the resistance zone, okay? So that they can start selling their position in the market. That's why shooting star candle has a long wick here, very long wick. The shooting star appears when price is pushed higher here, to trigger the buy stop made by retail trader, made by us, or induce breakout trader, only to reverse quickly as the market enter sell into that liquidity here. So retail trader see the breakout and enter long. Breakout, okay, let's go. There's a breakout, we entered long. But the institution used the opportunity to sell at the premium price. Take a note for this. Institution used the opportunity to sell at the premium price. And the quick reversal lead to panic selling or panic exit. Of course. So we come to the last candlestick formation, which is morning star candle. So morning star is a bullish version of shooting star. Well, if you want to make it easy, use that term. But actually in the actual textbooks, morning star should consist 3 candles. First candle is the bearish candle. The second one is the spinning top or a hammer candle. It could be doji also. And the third candle is a confirmation candlestick pattern. So it confirms that the bullish start enter the market. That's the confirmation. But the psychology point of view is for this candle, the market maker found the best discounted price, and in the second candle, here, so the first candle, the institutional or the big banks found an interesting or discounted price, very nice discounted price, and then they start buying here. They putting the massive order on the market. So little by little, it's getting approved, getting liquidated. And the second candle is where the market makers start to absorb all the demand. And then the third one is when all the order flow or all the demand has been fully absorbed or fully liquidated by the big banks or by the big institutional player. So of course this is the perfect textbook Morningstar candlestick pattern. So for the actual one is in the next slide, which is like this. This is the actual Morningstar candle. We haven't seen a gap down, we only see a hammer candle and then the follow through. This you should be often seen on your chart. So this is the actual Morningstar candlestick pattern or formation when you are seeing them in your chart. Okay, so this is the end. I really hope that you understand the point of view, my point of view when talking about candlestick formation, the psychology part, the psychology side or the psychology point of view within the pattern of the Morningstar candle or the Harami candle or many more candlestick formation. So in the next video about educational content, I'm going to give you the idea how to enter on the Harami candle, engulfing candle, on the doji, spinning top, shooting star, and even morning star, so that you can start trading. You can build more confidence in the market when you are taking entry, so you can scale up your account, or maybe starting to enjoy your profit because you have watched our channel or watch our educational video, and I really hope it's going to be the best video for you to learn about technical analysis. Well, don't forget to subscribe to our YouTube channel, give it a like, comment, and don't forget to follow our Instagram and TikTok, of course, to see or to get notified when we are uploading a daily market outlook, weekly market outlook, and other more video coming up. So thank you for watching, and goodbye.